It's Tuesday, the 7th of February 2023. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 big stories today in 5 minutes. Let's jump straight into story number 1. Australia's largest gold company, Newcrest, says it has received a $24 billion bid from US-based Newmont.
Yes, apparently on Sunday, Newmont upped a bid which it had made in late January. It effectively values Newcrest at $27.40 a share. That's worth about $24 billion. Now, Newcrest's share price jumped 9% yesterday to $24.78, still well below that offer price. Newmont is one of the world's biggest gold diggers and known for its stable leadership and long-term planning. Now, a merger would make the new company the largest gold miner in the world by a bit. It comes at a time, actually, when Newcrest doesn't have a CEO. Its CEO stepped down back in December. There's a bit of history between these two companies, Michael.
Mm-hmm.
Newcrest was part of Newmont up until 1966, and then the US-based company decided to list its Australian assets on the ASX. It became Newcrest in the 1990s after it merged with a couple of other assets, including BHP Gold. What Newmont wants are the gold assets, including the massive Lihir mine in Papua New Guinea and Cadia in central west New South Wales, as well as the copper deposits owned by Newcrest. Now, gold miners aren't as big as oil, gas, iron ore, coal companies generally, but a Newmont-Newcrest deal would create a giant. If it goes ahead, it would own 4 of Australia's 5 biggest mines. It would grab a sizable lead over number 2 global player, Toronto-based Barrick Gold. This offer, Michael, is very much about Newmont creating scale and operating in a low-risk jurisdiction like Canada and Australia.
All right, very big corporate news. On to story number 2 now, and a bit of chaos in Canberra yesterday, Sean, with Victorian Greens Senator Lydia Thorpe quitting her party and moving to the crossbench over a split on the Indigenous Voice to Parliament referendum. The move really threatens much more than just the voice referendum, given the government has been relying on the Greens and crossbenchers to pass legislation.
Yes, Senator Thorpe has been an outspoken critic of the proposed Indigenous consultative body and has been pushing for other elements of the Uluru Statement from the Heart to be implemented first, including a truth-telling process and a treaty with Indigenous communities. That hasn't sat well with the Greens, who are likely to support the voice. Thorpe yesterday, who actually hasn't come out and said whether she will or won't support the referendum, but yesterday she declared herself leader of the Black Sovereign movement and said advocating for Aboriginal and Torres Strait Islander justice had become impossible inside the Greens. Now she'll join ACT independent David Pocock and Tasmanian Jackie Lambie as key crossbench votes, which the government will need in the future to pass legislation.
All right, story number 3. It is half-year profit season on the ASX, Sean, and at some point over the next 4 weeks, all companies with a December 31 half or full-year balance date will update investors on how they're going. Furniture retailer Nick Scali is always quick off the mark and reported yesterday.
Yeah, not such a good start, though, with Nick Scali's share price tumbling 13% after investors read into the results softness around future orders. Really worth keeping in mind when companies put out their results, what moves the share price is what they say about the future, not so much about the past. Nick Scali's case, bottom line was strong, revenue was good, dividend was up, but investors weren't fussed about what they were saying going forward. It's going to be really interesting just to see how much earnings slowed late last year. Things really get going next week, but there are a few big companies this week. Today we have Macquarie Group and Transurban, Amcor, Boral, Suncorp tomorrow, AGL on Thursday, News Corp on Friday.
Story number 4, Sean, there are plenty of players in the buy now, pay later space, and receivers have been called into one of those operators, OpenPay, with higher interest rates, really putting the whole sector under pressure.
Its shares were suspended last Wednesday at 20 cents, having been as high as $4.70 in August 2020. It's actually the first ASX-listed buy now, pay later player to collapse. OpenPay had been targeting high-value transactions, clearly didn't work, and McGrath-Nicol was called in. The sector has found it much harder to compete as funding costs have risen due to higher rates. Yesterday's announcement sent other buy now, pay later stocks lower. Both Sezzle and Zipco ended down between 2 and 3%.
All right, last one, story number 5, Sean. And even though it's on the other side of the world, the United States remains the most powerful country in Asia, while China's strength has been eroded by its strict COVID-19 lockdowns and border closures. This is all according to the Lowy Institute foreign policy think tank.
Yes, Lowy's annual Asia Power Index ranks Japan as the third most powerful country in Asia after the United States and China. India comes in at 4, while Russia is ranked 5th. Then comes Australia, then South Korea, Singapore and Indonesia. Now, China had been steadily gaining on the United States since 2018 when the Lowy Institute first conducted the analysis, but the pandemic and Beijing's zero tolerance policy around COVID has really pushed it back and slowed its rise over the past couple of years.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 7th of February, 2023. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.